All right, hey, this is Josh with Stanek Insurance. This short little video, I want to talk about One America and really their market penetration and their focus on what I'm about to call life insurance linked LTC, life insurance long-term care products, and then also annuities, long-term care products as well. So let's take a look at this. One America here with life insurance. Let's click this open here. But there's different ways to do it. There's really three different ways. You can use life insurance, fund it with long-term care. You can use an annuity. You can fund it with long-term care. Or you can do a standalone long-term care policy. But let's take a look at life insurance as a foundation here. So premium options. Use existing assets such as CDs, savings, or IRA as a one-time premium payment, or choose guaranteed annual premiums that can never increase. So asset protection, get the security of a life insurance policy that grows at a minimum tax-deferred interest rate. Tax-free benefits, pay no income tax if you use your life insurance for qualifying long-term care expenses should you need it. Let me replay that again or repeat that again. Tax-free benefits, pay no income tax if you use your life insurance for qualifying long-term care expenses. And you can do a 1035 exchange with the Pension Protection Act of 2006 that actually went into effect in 2010. You can actually take a policy and you can exchange it. You 1035 exchange. Leave a legacy if you never use a long-term care benefit, or if you only use a portion of it, your named beneficiaries receive the death benefit income tax-free. So life insurance, let's scan down here, can be purchased for a single person or two people with benefits available for both. Premiums can never increase and your benefits cannot change. Because it's built on life insurance, your policy's death benefit goes to your beneficiaries if you don't use it for long-term care. Long-term care protection becomes available when you cannot perform two of the following activities: of daily living, bathing, dressing, eating, continence, toileting, transferring, or if you have cognitive impairment such as Alzheimer's. Choose protection for a specific number of months or get extended guaranteed lifetime benefits as an option. In a previous video, if you've been following along on this YouTube channel, I was talking about reimbursement, how to get your money, reimbursement or indemnification or cash benefit. This is a reimbursement. This is not an indemnification policy, which means you're going to have to submit your receipts to get, obviously, money back from this company. But a broad range of qualifying long-term care expenses means you can receive care in your home, use adult daycare facilities, or stay at a nursing home or assisted living facility. Covered care also includes qualifying hospice care, respite care, caregiver training, and supportive equipment. So that's the life insurance portion of it. So a lot of people think, okay, if I buy standalone long-term care, if I buy a standalone long-term care policy, make these payments of $150, $200, $250 a month, I'm going to lose the money if I don't use the policy. Whereas if you have a life insurance policy that has some cash accumulation in it, you can take that and you can structure it and you can make it a combination, or they call it a link. That's the terminology. However you want to, I don't get into all the semantics here. Look, long-term care combo or long-term care linked or life insurance linked. You can use that policy and maximize, get your money working for you if you have that. But if you have an annuity, you already may have an existing annuity. Again, we talked about doing a 1035 exchange. And again, when you do that exchange, you can do that tax-free and so forth. And that's because of the Pension Protection Act that went into effect in 2010. So single premium option, use existing assets such as CD, savings, or another annuity as a one-time only premium payment and avoid ongoing non-guaranteed premium payments. Added value for care. Your cumulative value grows at a guaranteed minimum interest rate. When you withdraw money for long-term care expenses, your funds get credited even a higher interest rate. Tax-free benefits, pay no income tax if you use your annuity. This is big right here. Tax-free benefit, pay no income tax if you use your annuity for qualifying long-term care expenses, regardless of the deferred gain, subject to monthly maximums and premiums funded after tax. So it gets into this. And again, this is One America. They're a power player in this industry. They really are. They're a strong player. They're backed actually by State Life Insurance Company out in Indianapolis, Indiana. And this is what they focus on. Obviously, they have other products, but this is what they're strong in. This is their strengths. So a variety of strategies to choose from. Any policy or annuity can be purchased for a single person or two people with benefits available for both. Your policy's accumulated value goes to your beneficiaries at death if you don't use it for long-term care. Long-term care protection becomes available when you cannot perform two of the following. Again, two of the following 6. And a broad range of qualifying long-term care expenses means you can receive care in your home. Adult day care, nursing home, assisted living facility. So this is a company that I really like. I like Mutual of Omaha as well. I think they're a very strong player as well. But this is a review on One America. And they have a very solid product, A-rated company. They don't mess around. And so different ways to do it. You can do it with life insurance, linked long-term care product, or you can do an annuity long-term care product, or you can do a standalone long-term care product. Depending on your situation, it all depends. Depends on kind of the assets that you already have in play. And maybe you don't have those in play. But again, it depends on a holistic, got to look at your plan and see what would make the best sense. But if you have something already in play, it may make sense to do a 1035 exchange and maximize what you already have going on. Again, Standing Insurance, I'll put more notes below here. Any questions or comments, leave them in the notes there. And keep it locked and loaded right here, Standing Insurance.